Now onto the ET Money show. Let's get started with our first segment. Come next week, the 9th day festivals of Navratri will begin in India, and on the 10th day, when mythologically Ravaan is killed, and we will be celebrating Dussehra, marking the new beginning of the good. Therefore, as we get into the festivity mode, are you considering to buy a property to make a living out of it? Commercial or residential real estate? Which one would prove to be a better buy for you, given that the banks roll out quite lucrative offers during the festive season? And to talk about the real satire of real estate, we have Mr. Abhinav Joshi, who is the head of research at CBRE, joining us right now. Firstly, a very good evening, Abhinav, and thank you so much for joining us today on ET Now. What should you buy? A house this festive season? And the second question is that commercial or residential state, which is a better buy if one is looking to buy a property?
Thank you so much for inviting for your platform, and good evening. Both commercial and residential have seen significant jump in terms of demand over the last 1 year, especially post-COVID, because there's a fair amount of pent-up demand that's come into the market. If you talk about commercial, then in just the first 6 months of the year, we've seen close to 30 million square feet of office leasing, as several corporate occupiers, who were sitting on their real estate decisions for more than 2 years, started exercising those decisions because of relative normalcy, a very effective vaccination drive, and the fact that, they had hired a lot of people on board and they wanted more space. And we're seeing that positivity across cities coming from corporates across sectors, whether it's technology, banking, financial services, life sciences, healthcare firms have also been expanding. So commercial is definitely seeing a huge jump. In fact, 2022 could turn out to be the second best or perhaps the best year for office leasing in India ever. As far as residential is concerned, it has also seen a very strong demand momentum. And residential, in fact, recovered much earlier than office towards the end of 2020 because of all the accommodation by several state governments and central government and the accommodative monetary policy. The appetite for home ownership had jumped up significantly. We saw that trend in 2021. We saw that trend for most of 2022 as well. In fact, if you just look at the quarterly numbers of sales for 2022, we are looking at anywhere around 70,000 to 80,000 apartments getting sold, which is more than double of what we used to see pre-COVID. So the scale and size of the market for both commercial and residential has gone up. Now, if you're looking at an investment perspective, it primarily depends on the kind of ticket size you have. So both have their pros and cons. If you're investing in residential, typically the entry barrier is lower because you'll find a product as cheap as 20-25 lakhs or lower in a certain neighborhood, or something at 50 lakhs or a crore, or something beyond even 2 to 4 crores. It entirely depends on your investment capability, but it's a larger market, and it's also relatively more unorganized, if I can say that, and more fragmented, especially from a renting perspective. But when it comes to commercial, the ticket sizes are typically higher. Of course, more expensive assets. It's a relatively smaller market, but I would say more organized, especially when it comes to end-use renting. There is a fair amount of institutional capital that has gone into commercial, anywhere around $12 to $15 billion that has flown into commercial real estate in India in the last 10 years. And you have a lot of good quality developers, institutional investors who are coming up with quality assets. So, the two are completely different. In residential, the other advantages besides entry barrier is that finding a tenant is easier. Getting a home loan is also easier. But then the risk is that the turnover of tenants is also quite fast. On the commercial side, getting a tenant might be a little bit of a challenge, and you'll have to obviously collaborate with the developer. But these are typically longer tenancies. The typical structure in a commercial or a retail or a warehousing lease would be 3 plus 3 plus 3, with 3 years being the typical period after which the tenancy gets renewed. And there is some sort of an escalation that kicks in every year, and at the end of 3 years, typically your rents will go up by anywhere around 15%. But these are more stable tenancies. So if you're looking for a longer term stable income flows, and if you have the budget and if you want to diversify your portfolio, definitely go for commercial. But if you have a limited budget and you're risk averse, then go for residential. And the big difference between the two is that commercial rentals, they reflect market realities slightly more accurately, if I can say that. They've seen significant growth in the last 10 years, as a result of which, your commercial yields are relatively higher. The returns are relatively higher. In fact, they can be benchmarked with 10-year government bond yields also, anywhere from 7.5% to even as high as 9%. Residential yields or residential returns, on the other hand, are lower because in a market like India, there have been significant controls on, the residential leasing market because it's largely been all about tenant protection. So for the last several decades,
Yes.
rents, while they've grown, they haven't grown at the same pace as capital value. So, your returns in the long run will be lower in residential. But of course, if you have limited budget and if you're risk averse, go for residential.
Okay, thank you so much for making our viewers understand what are the pros and cons when we are comparing the commercial and residential property. But Abhinav, want to understand one point from the price perspective. Going forward, and especially in this festive season, is this a good time to enter a property? Because what we are seeing globally is that China is struggling in their real estate sector, and even US is also facing some issues, and even US political powers are warning that residential and property prices are somewhat expected to collapse or cool down a bit. Do you see that India is also on the verge of an environment where the residential and the real estate properties can decline or moderate a bit? And along with that, how do you find the interest rate scenario? Because going forward, the interest rates are expected to high. So I know that both of these views are contrary to each other, but would like to understand, is this a good time to enter a real estate property?
I think it's a wonderful time to invest, and that's because your demand momentum is very strong. See, from a growth perspective, India is positioned very differently compared to the West or even compared to China because they have their own specific challenges. While an anticipated recession next year will definitely impact the Indian economy, we're still expected to grow, have positive growth rates. What's important for us to note is that, look, from a commercial perspective, because we speak to a large number of corporate occupiers across the board, they're very excited about expanding their footprint in India. Of course, if there is a capital freeze in their home markets, let's say if you're talking about American multinationals, if there is a capital freeze, they might delay their plans. But India, given our cost and scale advantages, is very integral to their portfolio. So if they want to reduce their footprint somewhere else, they will definitely make sure that they expand in India because they need Indian talent to create all those softwares and technologies and that huge push towards digitalization that's impacting almost every sector. It's mostly Indian talent which is being used. On the residential front, again, the sweet spot is unsold supply. Because yes, this concern has always been there with our residential sector. In the past, let's say post the recovery that we saw post the financial crisis, at the tail end of it also, there was a fair amount of speculation that was happening and oversupply that came into the market. But right now, unsold inventory has gone down. It's at a decadal low, if I can say that, despite the huge supply that's coming in. And that just sort of conveys that there is genuine home buyer demand. There's been capital appreciation because input prices have also gone up. But there is still that window for investors to really look at the right product, evaluate the product as per developer capability, do their due diligence, and just go ahead and invest.
Okay, totally take your point. But coming this festive season, Abhinav, what is the demand looking like? Give us a sense on that. And which are the pockets and especially the cities where you are seeing good demand building up? Either it's tier 2 or tier 3 cities, and which segments, especially when it comes to the residential property, what is in the buying list of the purchasers?
When it comes to residential, the segments that are dominating are clearly mid-segment. And in mid-segment, I would say the upper mid-segment is dominating. So mid-segment, I would say anywhere from rupees 45 lakhs to about 1 crore. And the upper mid would be anywhere from 75 lakhs to a crore, because we've seen some capital appreciation. So at least in the larger markets like Gurgaon or Noida or Bangalore or outer areas of Mumbai, we're seeing demand concentrated in that section, in that particular segment. Pune as a market is doing really well, because in Pune you have smaller ticket sizes. You have a large quantum or large array of projects from which you can select. So it's not only attracting interest from buyers based out of West, but also other cities. So we're seeing increased investor interest, across markets, and that is expected to continue.
Okay. Thank you so much for highlighting the cities that are seeing good demand momentum. But if we see a longer term picture for the residential and commercial real estate sector, what's the outlook on that? I'm hoping that it's on the positive side.
Definitely, it's on the positive side. The big outcome of the COVID-19 crisis has been this appetite for quality. And that is something all stakeholders across the board must understand, whether it's developers, investors, and of course, for end users or whether those end users are corporates or home buyers, they're looking for quality products and they're doing their due diligence. So things such as amenities, facilities, infrastructure support, even tech enhancement of these assets. Is there an element of sustainability or not? All of that, is sort of making a lot of impact, because the kind of recovery we're seeing in real estate is, if I can call it a K-shaped recovery, wherein quality assets, whether it's in residential, whether it's in commercial, retail, warehousing, they're picking up. And the ones that are slightly inferior in quality or in terms of their appeal or offering are still seeing, relatively muted demand. So that, I think, is the bigger takeaway. And, that's the direction in which both commercial and residential stakeholders should move.
Abhinav, when it comes to the demand for the residential property, especially in the tier 1 cities, what we are seeing right now is that some of those big companies that were really vouching out for the work from home setup, something like TCS, have now once again started calling back all of their employees. Once they were telling that work from home is such a model that can work wonderfully, and we are taking advantage of that. But now what the scenario is panning out, that things are changing. So from the demand that we were seeing in the tier 2 and tier 3 cities, is there any kind of moderation that you guys are expecting going forward? Because once again, people might have to shift to the metropolitan cities, and there they have to get a flat on rent and something of this sort?
Well, it will depend. There will definitely be some moderation as, that comeback happens. And my view is that if there is a slowdown in the economy or the slowdown on the demand side, then the kind of bargaining power that employees had, especially in the tech sector, that might go down, which basically means companies will assert themselves and they will come back. That obviously means that demand for both purchasing as well as renting in the larger cities will pick up. But at the same time, there will be that residual demand in smaller cities, which will, continue to sustain. And one thing that we've seen is that this tier two city discourse has come in, at several points in time in the last 30, 40 years. But when we look at them right now, all of them have very well-developed infrastructure fabric. Almost all these cities, whether it's Ahmedabad, Kochi, Chandigarh, Jaipur, Coimbatore, they have either domestic airports or international airports. They have very strong state highway and national highway connectivity. They have under construction metro lines. So from an infrastructure perspective, they're doing well. But yes, large part of the talent pool is still working for companies based out of tier 1 cities. So there could be some moderation.
Okay, so there could be some moderation when it comes to the residential property demand in tier 2 and tier 3 cities. But for this, we'll let you go on that. Thank you so much, Abhinav, for joining us today on ET Now and helping our viewers get a sense on this festive season, which one to pick up, either the commercial or the residential property, and which one is having the more pros and cons in those terms. Thank you very much.